All right, let's talk Pacira BioSciences and their second quarter earnings. Now, this was a really fascinating one because on the surface, the numbers were a bit of a mixed bag. But get this, investors didn't just shrug it off. They actually pushed the stock higher. So what gives? What did the market see that wasn't in the big, bold headlines? Let's dig in.
So here's how we're going to break it all down. First, we'll hit the big snapshot numbers for Q2. Then we'll peel back the onion and see what the individual products are doing. After that, and this is the real story here, we'll get into their strategy, the new guidance, and this massive catalyst with Johnson Johnson. And of course, we'll wrap it all up with our final rating and what we're watching next.
Okay, so let's dive right in. The top line, bottom line story for Q2 was, well, it was a bit of a head-scratcher. You had a miss on revenue, which is never great to see, but then a beat on profits, on earnings per share. So the big question on everyone's mind was, okay, which one is the market going to care about more? Well, turns out the answer is pretty clear.
So here's the tail of the tape. You can see revenue came in at $181.1 million, just a hair shy of what the street was looking for. But then you look over at non-GAAP EPS, that's earnings per share, and boom, 74 cents. That was a solid, clean beat. And that tells you something really important. Even though sales were a little soft, these guys are managing their costs like pros. They're running a tight ship.
And how did the market vote? Well, the stock popped 3.5% in after-hours trading. Right there, that's your signal. Investors basically said, yeah, we see the revenue miss, but we don't care. What they did care about was that profitability and, more importantly, the story management was telling about the future.
All right, so let's dig a little deeper here. Where did that revenue actually come from? It's really a tale of their two key products.
Okay, so EXPAREL, their big moneymaker, is still chugging along. You see it here, up a solid 4% year over year thanks to strong volume. But then you look at ZILRETTA, and it's basically flat, just up 2%. And that difference, that gap in performance, that's the whole reason management had to come out with a really compelling story about what's coming next.
And this, right here, is where things get really interesting. This is the part of the story that completely overshadowed that slight revenue miss. It all comes down to what management said about the future, their strategy, and their guidance.
This was the mic drop moment of the call. Look at this. They raised their forecast for full-year gross margin. Now, for anyone who doesn't live and breathe this stuff, gross margin is basically how much profit they squeeze out of every single sale. Bumping that range up to 78 to 80%. Wow. That's a massive vote of confidence for management. They're telling the market, we're getting even better and more efficient at making money.
And it wasn't just the margin guidance. They sent a couple of other really strong signals. They tightened up their revenue forecast for the year. That might sound small, but it tells Wall Street they have a much better handle on their business now. And then they went out and bought back $50 million of their own stock. You know what that says? It screams, we think our stock is a bargain right now. It's a classic confidence move.
Now, all of this ties back to their big picture plan, what they call the 5x30 strategy. It's basically a three-pronged attack. Keep growing the main business, keep the R&D pipeline full, and here's the kicker for today's story, form strategic partnerships. That third one is the real game changer because it lets them hit the accelerator without having to build a whole new sales engine from scratch.
And speaking of partnerships, that brings us to the elephant in the room, the big one, the deal with Johnson Johnson that was announced just before this call. This isn't just a catalyst for ZILRETTA. This is like adding a rocket booster.
So what exactly is this thing? It's called a co-promotion deal. But forget the jargon. Here's what it means in plain English. Pacira gets to plug its product, ZILRETTA, directly into the absolute juggernaut that is the Johnson Johnson sales machine. It's kind of like an indie band suddenly getting a global tour with the Rolling Stones.
So what does this mean in practice? For starters, you're literally doubling the number of salespeople out there pushing ZILRETTA overnight. But it's not just about quantity. It's about quality and access. J&J's team can get into doctors' offices Pacira couldn't. They can open up entirely new, lucrative markets. We're talking sports medicine, rheumatology, places where this product could be huge. It's a massive force multiplier.
Okay, so let's tie this all together. You've got a mixed quarter, sure, but it was totally eclipsed by stellar guidance and a partnership that, frankly, is a game changer. So where does that leave us? What's the call?
When you put it all together, the question is simple. So what's the trade?
Our call here at Talk Tickers is an outperform rating. We think there's more gas in the tank here, and that all the good news isn't fully baked into the share price just yet.
And here's why, in a nutshell. Our thesis is pretty straightforward. First,
We think the street is sleeping on just how big this J&J deal could be for ZILRETTA. That could be a source of some serious upside surprises down the road. Second, that gross margin improvement, that's not just a one-off. It provides a real safety net for their earnings. And third, you've got good old EXPAREL just providing a steady, resilient foundation to the whole story. You put those three things together, and you've got a recipe for outperformance in our view.
So there you have it. That's our take on Pacira's Q2. And of course, as always, we have to say it, this analysis is for informational purposes only. This is not financial advice.